Sam, it is good to hear you. It's been quite a ride this year when it comes to the energy markets. Morgan Stanley is talking now about a lot of supply on the market. How do you see it? Because it does sound like things are moving.
Yeah, I think once we have a normalization of flows through the strait, the expectation is that we go into an oversupply. We do expect next year to average with a surplus of just over 3 million barrels a day. Now, to be fair, if you then bring in all the rebuilding of SPR that we are likely to see, that comes down. So we do expect a little over 1 million barrels a day just of SPR rebuilding globally. But still, that would leave us close to 2 million barrels a day of a surplus next year.
Once we get to a normalization in the Strait of Hormuz.
That's right. And
when is that going to be?
We think that if we can continue to ramp flows, we really expect that by the end of July, this is done.
Okay.
In fact, if it wasn't for, the little flare-ups we get every now and then, if you just take into account the pace of ramp we had been seeing until, let's say, before Thursday last week, at that pace, we would have been normalized by early July. So the pace of ramp on the oil side, I should say, on the oil side has been pretty decent. On the LNG side, less so. Once you get that done, then you stop drawing down inventories as much. For now, they are still drawing down. I think one of the reasons why markets haven't really reacted that much to this latest flare-up is that when you look, for example, U.S. exports continue to be pretty solid. If you look at China imports, they have continued to go down. So China doesn't seem to be in a rush to replenish their inventories just yet. And this is somewhat accommodating this little bump in the road of the ramp up.
So anytime there's a flare, do you guys mostly around your desk or around your offices basically say, it's just a little flare up, we're moving in the right direction, right meaning calm, peace, things settling down in the Strait of Hormuz and things settling down between Iran and the rest of the world and Iran and the United States?
I think like everybody, we watch the headlines and see if the flare-up is followed by, let's talk and just work this out.
Yeah.
But it's also about how the market reacts to it. Then we can get a sense of, well, two things. One, from an investor perspective, what the expectations are. Do people really expect this to be a problem or just a transient issue? But the other thing that we can look at is the physical market, and the physical market hasn't really tightened up significantly either, which is what points us to go, okay, let me see how much China is pulling in.
Yeah.
And the physical balance is not that bad because China is helping so much.
What about the question of Iranian supply and how that hits the market?
Yeah, so now they have waivers. They are free to sell to the world. And when we look at what's happening with, let's say, oil on water, it has started to increase because you can get more Iranian oil on water. And like I said, the U.S. is also bringing more oil on water. So we do expect that to increase over time.
How material is it to the overall market?
It by itself, it's not going to solve, the issue. They were a small portion of everything that flows through the
Much
strait.
more significant to Iran as a country, and this is not, part of our conversation, much more significant to Iran as a country as a revenue driver.
That's exactly right. But before Thursday, if we were to focus on, let's say, the record flow day through the strait, they got to just about 13 million barrels a day, when before the deal, we were at a pace of about between 1 and 2 million barrels of visible crossings. Of course, if you take into account all the reroutes, everything else that we were seeing, we were getting to much better numbers.
Speaking of rerouting, and some notes your team shared with us, included from your folks, despite the recent pickup in flows, Gulf producers continue to invest in infrastructure projects aimed at reducing their reliance on the Strait of Hormuz. Talk to us about how things will change going forward, and does that, prevent any bottlenecks from happening in the future, but does it also add costs to moving oil around the world?
Yeah, I think the key words are security of energy supply, and everybody's very, very focused on it. This push to get additional infrastructure in the Gulf so that you're not so dependent on the strait, like the UAE building the extra pipeline. This helps with the supply side, but also on the demand side, something that we're debating internally as well is to what extent Will buyers of oil and gas follow the China market? So China had an electricity crisis back in 21. And since then, they've done, well, essentially three things. One, they try to switch more and more away from oil into EVs, but at the same time, they try to boost the production of coal and boost electricity coming from renewable capacity as well. So we're going to reduce exposure to what we are net short of. China's net short oil, net short gas. But we're going to do it in a way that we can control supply. We can build solar panels and we can produce more coal. So we think that this could be a model for a lot of regions across Asia. Not everybody has coal, so not everybody will be able to rely on that. But if you look at how many solar panels China is selling since the start of the war, it's shot up.
Who are they selling them to?
They're selling them to Europe. They're selling them across Asia.
Not to the U.S., though.
The U.S. doesn't really need the China materials as much, but the U.S. is also growing solar capacity significantly. I know that we had changes in regulation that would reduce the subsidies, but the projects being done now, they're grandfathered in. So for the next 4 years, a lot of solar capacity can continue to grow in the U.S. too.
You know, a few years ago, when I think it was George W. Bush was in the White House, and I did a documentary here at Bloomberg about the push for ethanol. And I think about Brazil's history, like during the oil crisis, where they went to sugar-based ethanol, right? And we were doing it kind of different here in the United States, corn-based ethanol. But how crises shape what people do going forward. So I'm listening to what you are saying, and I'm just wondering, does it mean that there will be a glut of oil probably going forward? I mean, this was a hard lesson, again, for the world to learn. The U.S. was in a better position than, let's say, in the 70s. Brazil was probably in a better position. But I'm just saying, is it going to be the longer-term investment theory when it comes to energy, oil specifically? There's going to be a lot around because people are finding alternatives.
Yeah,
and big demand drivers are finding alternatives.
And the word you used, again, this is the second very large energy shock within 5 years. We had the European energy crisis in 22. We just had this
because of the Ukraine, Russia, right?
Exactly. So if you're exposed to oil and gas imports, you look at this and it's like, well, enough already. Maybe I should do something about it. And to your point, this absolutely raises questions as to how much more oil demand growth we're going to see and for how long. Before the energy crisis now, we were of the view that we would have oil demand growth in the world for another decade plus, until the end of the next decade at least. This does raise some debate because now we think that behavior might start to change a little bit.
Well, speaking of behavior, are you taking seriously the idea that there could be tolls on ships going through the Strait of Hormuz?
So let me put it this way. When I talk to shipping companies, the main thing they say is, I don't mind paying a toll as long as there's clarity on the rules, because what I don't want to do is to go against U.S. sanctions. So if there is any type of payment request, any shipper to pay it would need to make sure they're in compliance of all the other regulations around it. So my impression is that a lot of market participants, they are more in search of clarity than specific rules here or there. Because even the toll that was discussed when it was being charged informally, my understanding is that it was to the tune of about $1, an extra $1 a barrel.
That's significant.
But it's not that different from normal volatility in the market. Is it going to really significantly increase energy costs? That's not obvious to me. And when I talk to shippers, that was the impression I got from them as well.
Hey, Sam, just got about 30, 40 seconds. What you say about China, like, you know, they want to be able to manage their energy needs on their own and not be so dependent on oil and alternatives, coal, different things that they've been embracing. Is the U.S. falling behind on alternatives, in your view? And just got about 30 seconds.
I think the U.S. has a lot of dominance on the energy side, and it's lacking more dominance on the metal side. But the government has pushed in that direction. We are piling up copper. We are taxing the import of steel and aluminum. We're building strategic reserves. So I think that there is a push in the right direction there.